All right. Hey, everyone. Thanks for tuning in. So, big day in the market yesterday, apparently. But we are not at all surprised if you follow me because people say to me, like, Mark, you make all these great market calls and everything. And it's like, I really don't. I just look at the market every day. And I've been doing this for a long time. And after a while, you just gain some kind of competence. The market was getting very thin, which we'll go over in a minute, meaning that most of the market's strength was just really attributed to just a couple stocks, right? I mean, the S&P 500 is 500 stocks, and maybe 20 or 25 or 30 of them are doing well. Maybe 100 or 150 have been neutral, but the rest have been going down. And we'll see that. But I want to just show you this chart on Merck here, which I wrote about today at my Benzinga site. I just think it's a really good example of one of the things that we talk about here is that some price levels just happen to be more important than others, and levels that were resistance can convert into support. And you don't need to be a market guru to see this. You know what? As a matter of fact, well, actually, I'm not going to get rid of it all. I mean, look at this, right? The $95 level was resistance back in May of 22 through July of 22. Lo and behold, we just had this big sell-off in November, and well, it actually started in June, but where did it come to an end? In November, right around the same level that was resistance. You could see here in August of 23, the 111 level was resistance. It became support a year later. You could see here the 119.40 level was resistance in May of 23, and it became support in March, right? Market memory, important levels can stay intact for a long time. Now, this happens because there are people who sell that thought they made the right decision when the price goes lower soon after. But when the resistance eventually breaks, a lot of these people say, I made a mistake, and if I can buy my shares back at the same price I sold them at, I am going to. So when the price falls or reverses and falls and eventually gets back to their selling price, they place buy orders. And if there's enough of them, it creates support. I mean, you don't need to be a former hedge fund trader or a master market guru to see it here on this chart of Merck. I mean, we're looking at a chart that's three years long here. And I mean, look how clear that is. Remember, technical analysis is about levels, trends, and momentum. And I say levels first because there's a reason. All right, now let's go take a look at the S&P, and there's something else I want to show you about levels, right? Now, where did yesterday's sell-off end? At just some random price level that was picked by the market gods? I mean, I guess you could kind of say that if you're, like into like that kind of stuff. I mean, who the hell knows? Market gods run everything else. Could be like Aaron Rodgers in this Hayahuska or whatever the hell it is. I saw the Grateful Dead almost 100 times. I know all about psychedelics. Right, let's move on here. Now, we get this big sell-off, right? Where does it end? The same level that was support here and the same level that was resistance over here. For whatever reason, this 585 level and 70 cents. I mean, look how close that is. Look how precise that is. This should boggle your mind. We're talking about markets that are worth trillions and trillions and trillions of dollars that have millions and millions, if not tens of millions, if not hundreds of millions of participants. And look at the opening price over here. Thursday, the 17th of October. Opening price, $585.91. Yesterday's low price, $585.89. We're talking 2 cents difference, okay? But it just goes to show you, if you know where these price levels are, it's going to help your trading. Because if you were thinking yesterday about like, oh, gee, where should I buy? Where should I buy? Where should I buy? Where should I buy? It's like, I like to buy when things get to former bottoms, all right? Sometimes there's former bottoms at former tops, what we just talked about, seller's remorse. So this bottom line is this sell-off did not end here because of a coincidence, right? And if you learn how to read markets and if you learn how to identify important price levels, it's like having a map to the market. If you don't, I don't know how. There's a lot of styles that work, but I just, as a a day trader or a prop trader, I just have a hard time seeing you be successful if you don't understand this. All right, here's our tech sector. Oh, you know what I wanted to show you before I get too into this is one of the reasons why we thought the market was starting to come apart is because here's our market weighted S&P 500. Apple, Nvidia, Microsoft are 20% of these 500 stocks that make up this index here. All right. I'm going to get rid of that too. So in theory, right, money's going into the big boys, coming out of the small ones. And we could see that in this RSP chart. This is the S&P 500, where every stock is equally weighted. And this thing has been in a free fall. I mean, this is probably historic. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days in a row this thing has been down. And considering yesterday's sell-off and considering the move lower we've had, this is not a significant rebound. This kind of tells me that maybe we take a break for a couple of days, but I think the broader market's going to head lower. After like a day like yesterday where you get this like massacre, it's not a surprise to get a little bit of support at an important price level like what we talked about. But look at today's action, right? We closed lower than the opening price, well off the highs. I mean, you never know. I've been doing this long enough to know that if you have an opinion, it could be a dangerous thing. But my educated guess, which hopefully you're paying me $20 a month for, which is nothing, and that's going up soon, by the way. So sign up now. Is this isn't look at when we had this sell off here, right? Look at that action. Like that's a powerful rebound. This is like the buyers are coming out of the woodwork. You didn't see that today, so we'll see what tomorrow brings. All right, let me just look through a couple of these things real quick here. Financial sector. Wow, look at that. There's a breakdown. And once again, what do we see? Right? Where did it find support? The level that was resistance. Here's a gap. There's an old saying, gaps refill. One of the main reasons why you get support, as we've seen, is remorseful sellers trying to buy their shares back at the same price they sold them at. When you gap through levels, meaning you don't even trade at them, well, if there's no trading, there's no one who sold who's going to be trying to buy their shares back. So when the sellers coming into the market over here, they have a hard time finding buyers. And they really just got to knock the shares down to draw buyers in off of the sidelines. So that looks pretty weak. Healthcare has been a disaster. And that continues. Yeah. And we just broke support. Yeah, healthcare continues to go lower. Industrials. So a big part of this market got really thin, right? Just went into a couple stocks. Tesla, Microsoft, Apple. So here's a pretty interesting reversal pattern on Tesla. And when you see gaps like this is what we could call an exhaustion gap. And this is a breakaway gap, right? People are really aggressive at two times, the beginning of trends and the end of trends. So this is the aggressive buyers at the end of the trend. This is like the people that have been on the sidelines that have just been waiting and waiting and waiting. And finally, they're the last of the party. And they're like, all right, I'll go buy it at any price. So there's aggressive buying, and that's it. They're the last buyers at the party. There's no buyers left to push the price higher. Then we got some really kind of interesting reversal action here. Open there, close there, open there, close there. Broke the uptrend. Microsoft and Apple have been really kind of strong as well. Ooh, look at that. Now, here we go again, right? So this is going to be, the next couple of days are going to be pretty interesting, but they're also going to be pretty easy to read because we got a lot of stuff at clear levels here. And what happens is sometimes when you get to like a market top, people start selling like most of their stocks and putting their money to things they perceive. Notice I use the word perceive as safer, like Microsoft, Apple. Nvidia is blown up. Oh, look at that. Nvidia. So this is something to key on, right? A lot of times with support breaks, the next move down is preceded by what was support turning into resistance. We've talked about seller's remorse, but this is buyer's remorse. People buy, and when the price goes lower, they're like, I made a mistake. If it gets to my price, I'm going to get out at break even. So we got some really clear levels to watch over the next few days. So as trading goes, there's going to be some decent money to be made in the next week or two. So please make sure you check back in. Let me know if you have any questions. Subscribe. It's only $20 a month. Don't be cheap. And yeah, I'll see you all soon. Thanks, everyone.